Have you ever wondered how some companies manage billions of dollars without selling a single product or running any shops? Sounds strange, right? Welcome to the world of Blue Owl Capital. It is not like Apple or McDonald's. You won't see its products on shelves or its stores on streets. Instead, it belongs to a powerful financial world called alternative asset management. In simple words, it means managing huge pools of money for big investors, pension funds, and institutions. Over the years, Blue Owl has become one of the important names in this space. Its growth has been fast, and its influence in finance keeps increasing. But here is the real question. What happens when fast growth meets pressure, competition, and risk? How did Blue Owl rise so quickly in the financial world? And what challenges is it facing today behind the scenes? Let's break it down step by step. If you enjoy deep financial stories like this, don't forget to like and subscribe to Collapse Files for more. What is Blue Owl Capital? Blue Owl Capital is a US-based investment company that works in the world of finance. It does not run stores or sell products. Instead, it focuses on managing large amounts of money for big investors. Its main areas include private credit, which means lending money directly to companies, real estate investments, private equity-related strategies, and managing large institutional capital. Unlike traditional banks, Blue Owl does not take money from regular customers as deposits. Instead, it works with pension funds, insurance companies, wealthy individuals, and large institutions. The company's main goal is to invest this money in different ways to generate returns for its clients. One of the most important parts of its business is direct lending. This means it gives loans directly to businesses without going through banks. This became more important after the 2008 financial crisis, when banks became more strict about lending money to companies. The beginning, Blue Owl Capital was officially formed in 2020, but it did not start from zero. It was created by bringing together two major financial firms, Owl Rock Capital and Dyal Capital Partners. These companies already had strong experience in managing investments and working with big institutions. Later, they came together under the Blue Owl name when the business went public through a special deal called a SPAC, which stands for Special Purpose Acquisition Company. At that time, many companies were using SPAC mergers to enter the stock market quickly, and Blue Owl was part of that trend. This timing helped the company gain attention from investors and grow faster in the financial world. Instead of slowly building from the ground up, Blue Owl entered the market with an already strong foundation. This gave it a fast start and helped it become a well-known name in alternative asset management. Why Blue Owl grew so fast? Blue Owl's rise was not random. It grew because the financial world was changing. 1. Banks stopped lending easily. After the financial crisis, banks became more strict about lending money. Because of this, many companies needed new sources of funding. Blue Owl stepped in to provide that support. 2. Private credit became popular. Big investors wanted higher returns than traditional bonds or savings. Private credit provided that opportunity. Blue Owl became one of the key companies in this growing financial space. 3. Huge institutional demand. Pension funds and insurance companies needed safe, long-term investments. Blue Owl provided structured lending products that helped them earn steady returns over time with managed risk. 4. Strong fundraising ability. Blue Owl raised billions of dollars from investors, which gave it strong financial support. This large amount of capital helped the company grow quickly and expand its investment activities. The big growth phase. After going public in 2021, Blue Owl Capital expanded very quickly. The company raised large funds from investors and increased its assets under management. It also expanded its lending activities and built partnerships with major institutions around the world. Because of this fast growth, Blue Owl became one of the fastest-growing names in alternative asset management. Many people started seeing it as part of the new Wall Street. It was not a traditional bank and not a hedge fund either. Instead, it sat somewhere in between, focusing mainly on private credit and long-term investments. This unique position helped it stand out in the financial world and attract even more attention from big investors and institutions looking for new ways to invest money safely and steadily over time. The business model: to understand Blue Owl's rise, we need to look at how it makes money. The company mainly earns in three ways. First, management fees, which are charged for handling large investment funds. Second, performance fees, which are earned when investments do well and generate strong returns. Third, interest income from its credit funds, where it lends money to companies and earns interest over time. This business model is powerful for a few reasons. It grows as the company manages more money, so size matters a lot. It also does not rely on physical products or stores, which makes it very different from normal businesses. Instead, it benefits from long-term money coming from big investors. However, this model also depends heavily on trust. If investors lose confidence or markets become unstable, growth can slow down. So while the system is strong, it is also sensitive to economic changes and market conditions. The pressure behind fast growth: even though Blue Owl was growing, challenges were building underneath. 1. Interest rate pressure. When interest rates rise, borrowing money becomes more expensive. This affects companies that need loans, reduces the value of private investments, and lowers demand for credit funds. As a result, deal activity slows down, which can create challenges for firms like Blue Owl that depend on lending and investment growth. 2. Competition in private credit. Blue Owl is not the only company in this space. It faces strong competition from other big firms like Ares Management, Blackstone Credit, and Apollo Global Management. All of these companies compete for similar investment deals and investors. This competition reduces profit margins and increases pressure in the market. 3. Risk in private lending. Private credit is powerful but not without risk. If companies are unable to repay their loans, lenders can lose money. Because of this, Blue Owl must carefully manage risk across all its investments to protect its portfolio and maintain stability. 4. Dependence on institutional money. Blue Owl relies heavily on big investors. If these institutions change plans or invest less, it can slow growth. This creates a risk of dependency on external funding sources. 5. Market cycles. Like all financial firms, Blue Owl is affected by economic slowdowns, market uncertainty, and investment cycles. When markets slow, it becomes harder for the company to raise funds. Is Blue Owl in a collapse? No. This is important to understand clearly. Blue Owl Capital is not collapsing. It is still growing, still raising capital from investors, and still active in global financial markets around the world. Like many large financial firms, it does face ongoing pressure. This includes the need to maintain steady growth, strong competition from other big investment companies, sensitivity to changes in the economy, and high expectations from investors who want good returns. So, the right way to describe Blue Owl is not collapse. Instead, it is better described as operating under pressure in a fast-growing and highly competitive financial system. The reality of Wall Street growth. Blue Owl shows an important truth about modern finance. When a company grows fast, it gets more attention, but it also takes on more responsibility. As firms expand quickly, investors start expecting higher returns. At the same time, competition becomes stronger as other companies try to win the same deals. Managing risk also becomes harder because the business is larger and more complex. On top of that, financial markets closely watch every decision the company makes. This is the reality Blue Owl faces today. It is not just about growth, but also about handling pressure, expectations, and constant change in a competitive financial world. The role of private credit in today's economy. Private credit is becoming an important part of global finance. It helps companies that cannot get loans from traditional banks. It also supports large business deals, real estate projects, and major infrastructure developments. Blue Owl is one of the companies benefiting from this growing shift in the financial system. As more investors and businesses look for private lending options, firms like Blue Owl play a bigger role in the market. However, with these opportunities also comes responsibility. Managing risk carefully, protecting investor money, and maintaining trust are very important for long-term success in this fast-changing financial world. The future of Blue Owl. So what happens next? Blue Owl's future will depend on several important factors. One key factor is the interest rate environment, because lower rates can increase borrowing and investment activity. Another is investor demand. If more institutions invest money, the company can grow further. Strong risk management is also very important to avoid loan defaults and protect investments. Finally, competition plays a big role, as Blue Owl must stay strong against other large financial firms in the market to keep its position and continue growing. Lessons from the Blue Owl story. Even though Blue Owl has not collapsed, its journey teaches important lessons about finance and business. First, fast growth always brings pressure, because the bigger a company becomes, the higher the expectations are. Second, finance is closely linked to the economy, so interest rates and market conditions have a strong impact on performance. Third, competition never stops, and even large billion-dollar firms must keep improving and adapting. Finally, trust is the most important factor, because without investor confidence, capital and growth can quickly slow down or disappear. So what does the story of Blue Owl Capital really tell us? Is it a story of success or a story of pressure behind success? Blue Owl has become a symbol of modern Wall Street. It grew at a time when private credit became powerful and banks pulled back from lending. This gave it a strong place in a fast-changing financial world. But even strong companies do not grow without challenges. Today, Blue Owl operates under constant pressure from market cycles, competition, investor expectations, and economic uncertainty. So maybe the real story is not about collapse at all. Instead, it is about something more realistic, how a powerful company tries to stay strong in a world that never stands still. So what do you think? Can financial giants keep growing forever? Or do all of them eventually face limits? If you enjoyed this breakdown, don't forget to like and subscribe to Collapse Files for more deep financial stories explained in simple words.